It's like right about there. We have about an 80% return risk, which isn't bad. Or, if you translate that to dollars, you make $335. So off of this, 78% return. It's saying at the closing price. Although I'm not sure that's going to be the exact closing price. But you're all welcome, because I'm sure you all just copy traded that, right? Flat as today. Yeah. Well, I said it was risky. I didn't say it was too risky. Well, it is, because it's more risky because I was taking on more of a max loss than the potential profit. Anyway, so flat on the day, down 0.1%. Super fun. We got ES closing the day out just below last week's close, which I think is a little bearish, or at least a sign of a little bit of weakness. However, there is apparently support here at like 64.56 that we caught, meaning that we could come back up and retest this trend tomorrow, which would maybe not give us a new all-time high, but could definitely be a push higher, and then we would have to see what happened. But right now, it kind of looks like it's on track for that with the two supports found in the intraday and a slightly higher low, which would give us, a good base going into FOMC to see whether we reject from that level or break out. Probably bulls would rather be positioned a little bit to the upside of 50, given that's their primary support. Yields at the top end of the curve crept up a little bit, still moving higher. Dollar moved up a bit today as well, mostly regaining the drop since like the 25th. So a lot of the cuts that were being priced in are now being priced out, and we did see an increase in correlation broadly throughout most of today, although not a very strong increase in correlation. Or, well, decline in correlation, I guess, increase in dispersion, especially not on the 3 month, which looks like it's continuing to break down. So possible that perceived risk a little further out is moving up. Commodities pretty flat on the day also. Slight gain in some of the agriculturals. Oil down a little bit, gold down a little bit, silver up a little. Nothing exciting. Bond volatility is still dog. Carry trade leverage moved back up again today, but only at the top end, not the short. We're still seeing an increased demand for long vol. Forward yield on volatility is still rising, although not a lot. Skew on Friday was up. Breadth, I guess Russell was a gainer, so a slight improvement in like small and mid caps, but I don't know. Dow's down, so maybe not that important. Correlation between VIX, cash VIX continued to slide up. I think this week's VIX expiration could be kind of interesting, especially with it coming right before the FOMC minutes. But we are continuing to see correlation pick up, so probably still continued demand for some tail risk hedging. And Fed fund futures are pretty consistently pricing out those additional rate cuts, but slowly, much slower than they were priced in. Bear steepener didn't really do much. So we moved down and tested the trend, and we fell below the longer term resistance in doing that. However, we have not yet failed the trend. Remember that 64.27 target that puts us back into the July monthly range, which is here. July monthly. It's actually there, but that breakdown would be the first indication that perhaps the bullish bias going into the start of August has dwindled off. However, I still think a loss of the EMA 30 would be a much better place to confirm any kind of breakdown, and that's at around 63.15 right now, 63.26. But yeah, looking a little tiny bit more bearish, just nothing confirmed. So there's a signal on a loss of 64.27. Confirm on a loss of 63.26, and more confirmation on a loss of 62.87. And I think below that, the next level of any kind of importance is 62.01. To the upside, it's still just the all-time high, which is like right here. And my upside price target at like 65.01, which we haven't seen yet. I will say that, you know, today's price action does indicate that there's some support here. So this could bounce. All right, that's it. Thank you guys so much. I gotta go. Later.